market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, global stocks hovered near an all-time high as traders prepare for data that will offer insights about the health of the U.S. economy and the Fed's interest rate path. Well, I'm delighted to be joined to get us started in this back-to-school mood. Charlotte Ryland, head of investments at CCLA Investment Management, and we're also joined by Bloomberg's MLive strategist, Ven Ram. So thank you both for joining us. Charlotte, it does feel like it's back to school. It's September. It's kind of like a bit of a volatile month. It's not always a great month. And the market's quiet today, but pointing to that U.S. data.
Yeah, absolutely. And I think, having had that sort of sell-off during the summer, we now seem to be back up to all-time highs again. And, the question of markets is still, are we getting rate cuts and is there going to be a recession? And that's still the conundrum that's going on.
Do you think we'll see a recession, or are we at least too complacent that the rate cuts are coming in the amount they're coming?
Yeah, I think that's... Certainly the market has priced in a lot of rate cuts, and I think, if we don't see a very significant slowdown in growth, possibly they might be disappointed on that. I think certainly some are coming. And then in terms of the economic data, yes, things are definitely beginning to show signs of a slowdown. Not yet at the point of saying this is definitely a recession, but certainly you've got, unemployment becoming a little softer. You're seeing consumers definitely softer in places, particularly at the lower end. And manufacturing, again, is also weak as well. So there's definitely signs of things not looking so good.
I mean, Ven, I know yesterday we were talking, good morning, first of all, I know we were talking yesterday about this resurgence in bonds and behavior because they're started to behave like they were meant to, but actually the fact that we're not sure what supports U.S. equities going further.
Well, equities are overbought, Francine. Good morning to you. Equities are extremely overbought and stretched. And as Charlotte mentioned, if the economy is slowing, and there are visible signs that the economy is slowing, the U.S. economy is slowing, I think stocks have been bid up too much and too fast. I don't think the pace of gains is sustainable. And increasingly, with each passing day, it looks like the market is more and more frothy. I mean, if you look at the aggregate market cap of NASDAQ alone, it eclipses the aggregate output of the U.S. economy as a whole. And I don't think, just a portion of the economy warrants that much of market capitalization. And therefore, I think some caution is in order here.
Do you look at the yield curve and to indicate a recession? What are the kind of indicators that we should be watching out more closely? Is there a danger that the markets have to reprice like they have in the last 18 months, frankly, sometimes being all over the place?
Yeah, they've been all over the place indeed, but I think that PMI still offer the best clues for where the economy is headed, and I think that those have been pointing to it's a kind of a slowing economy, whether you look at it in the Eurozone or whether you look at it in the US space. And I think that, this week's jobs data, obviously, in the US is going to matter a whole lot. And particularly, I'm not going to be interested in the headline number so much as the jobless rate. Because if you look at the trifecta of conditions that matters to the Fed, inflation, unemployment and the jobless rate and the financial conditions. It's only the financial conditions that are kind of pretty loose. If you look at the jobless rate, it's ticking higher. And if it continues to tick higher, the Fed would be concerned about what is happening to the economy.
And so, Charlotte, where do you see value?
Yeah, that's interesting. I think, there are certainly parts of the consumer which have been beaten up and looking more interesting. So some of the sort of consumer staples have done incredibly well, things like Colgate, but actually some of the things like the alcohol stocks, we've had a really difficult time post-pandemic, looking really quite cheap. And equally things like, a Nestle, which is an incredibly defensive stock. Yes, they've had some changes in terms of the CEO, there's some question marks about whether they'll have to reset margins. But, for longer term, that's probably a stock that is looking more attractive if you're looking at that more defensive element of market. But equally some of the, sort of healthcare stocks, again, looking quite attractive. Some of the life sciences businesses which have had a difficult time again post-pandemic, beginning to see signs of that improving and growth coming back, and particularly things like medical devices as well.
So, Charlotte, is there anything, when you look at currencies, and I know we talk a little bit about, the dollar rally maybe being back, does that change your view on, for example, the sectors or the parts of the world where you want to be in?
Not hugely, to be perfectly honest. We invest globally. They're global businesses. They have lots of different currency exposures coming through, so it doesn't particularly affect. But, clearly we've had a lot of volatility, in particular with the yen over the summer, and some question marks about whether that sort of unwind has happened now and whether that'll be come back again. So.
Ven, the yen gave our heart a bit of a running for its money. Like, what happens next with the yen? Are traders going to be able to deal better with whatever the BOJ throws at them next?
I think that the markets are underpricing the risk of BOJ hiking again, as you had reiterated this morning. If you look at the yen, Francine, it's completely undervalued. It's a currency that's undervalued by a whole lot and then some. If you look at the real effective exchange rate of Japan, it's one of the cheapest currencies going in the G10 world. So I think that the path for the yen is higher from here, and it's a currency that's been held down for too long by the BOJ's policies. And UAID has reiterated again today that the BOJ will hike rates. The markets are underpricing that risk. If you look at OIS pricing for the end of June next year, the markets are still not assigning a fair chance of a 25 basis point hike. And I think that's completely the mispricing. And as that mispricing corrects eventually, I think that the yen has upside momentum from here.
Charlotte, is there anything in Japanese equities that you like right now?
I think, for us, you're looking for sort of global leaders. There's something like a Keyent, for example, which is particularly sort of focused on automation. They're having a bit of a difficult time in terms of, exposure to China, exposure to industrial sectors, but longer term, we think that's sort of quite an interesting company. But I suppose the trouble with a lot of the, great quality Japanese companies is actually they tend to be quite expensive when you compare them to some of the global peers. And so actually, it's quite a difficult market for us to find, a lot of opportunities.
Charlotte, what are you expecting in China? Are you expecting more of that frugality that we've seen for shoppers in China to continue, and how does that impact, again, some industries?
Yeah, I think China continues to look really, really difficult. The housing market continues to be in problems. We're still seeing problems from real estate developers. We're seeing massive overcapacity in a lot of their industries, stockpiling steel, etc., going on. And the consumer, is struggling. Look, they could speculate in the stock market, I suppose, or they could speculate on housing. All those things, avenues now cut up to them. And, wages aren't improving particularly. So, I think it remains a really difficult market, and that has implications for, some of the big consumer companies, which have been, like a Nike or an Estee Lauder, which China was a big growth driver for them in the past. That's going to continue to be quite difficult in that market.
Ven, before we let you go, I also wanted to ask you actually about European bonds, because I know you wrote this piece today looking at the ECB confronting higher neutral rates and what impact that has on European bonds.
Absolutely. There's this ECB sources leak story that says that, the ECB is thinking that the lower bound of its your deposit rate is going to be 3%. Now, that is a lot less bullish than what the markets are expecting. And if 3% is the new neutral rate for the ECB, then I think that, bonds do not have room to rally. And in fact, we've got a bunch of PMI prints and CPI prints of late that have showed weakness in the Eurozone economy. And despite that, bonds have not been able to rally. And that tells you why exactly they're not been able to rally. Because, if the neutral rate is higher than in the previous cycles, then bonds can't rally too much. And at 240 on the 2-year German, I think that the markets are kind of overpriced for the ECB rate cuts. And as that corrects, I think that the next step for yields is higher from here, albeit modestly so.
Ven, thank you so much, as always. Bloomberg's live strategist Ven Ram and Charlotte Ryland from CCLA Investment Management will be back with us a little bit more to talk about Europe. Charlotte, thank you. Now, coming up, as Volkswagen mull their first ever plant closures in Germany, we take a deep dive into the industry's troubles. That's next, and this is Bloomberg. Welcome back, everyone. Today's Bloomberg Big Take digs into Volkswagen's historic move to consider factory closures in Germany for the first time in 87-year history. Now, this as EU car makers lose ground to Chinese manufacturers in the race to produce electric vehicles. So let's get more on all of this with Bloomberg's Will Wilkes. Will, what exactly is Volkswagen considering? And it seems pretty significant, so why now?
Good morning, Francine. Yeah, Volkswagen is considering closing its first major car-making plant in Germany for the first time in its 87-year history. In the whole post-war period, Volkswagen has just expanded and expanded. And that now it might be closing down its first plant. The reasons are Volkswagen is struggling with, like all of European car making, is struggling with a kind of a confluence of various different problems, including, the removal of cheap energy as a result of Russia's invasion of Ukraine. Also, the fact that they have fallen behind on electric cars and they're coming under pressure from Chinese producers who can just manufacture them at lower cost and arguably better vehicles.
So, Will, what does this move actually tell us about the state of Europe's car industry more broadly?
That is really struggling, and that the next few years are going to be very difficult for these car makers, and it will be not all workers are going to keep their jobs by the end of them. For years, European car making is kind of stuck in this difficult limbo between combustion engines on which they've excelled and made a lot of money, and this very, very costly and expensive transition to electric vehicles.
Well, thanks so much, Will Wilkes, there for the very latest, of course, on Volkswagen and some of the potential car closures. Now, you can read more on this big take story on the website and on the Bloomberg terminal all day. Joining us once again, Charlotte Ryland, Head of Investments at CCLA Investment Management, and Bloomberg's cross-asset reporter, Justina Lee. So, Charlotte, thank you so much for sticking around. Justina, when you look at the story, I kind of had to take a double take. This is a big deal, closing down plants. Does it really go to the struggles of the euro area manufacturing, competitiveness and productivity, and what does that mean for central bank policy?
Yeah, I think definitely. In the case of Germany, for so long, they've kind of relied on the growth engine of manufacturing. But I think the woes of the car industry kind of tells you that, overcapacity is an issue, kind of falling competitiveness in these kind of key industries of the future is an issue. And so the question here is, can kind of Germany transition out of that to maybe a more consumer-led economy? And I think, that kind of shows that the bind that the ECB is in. Because on one hand, like every other central bank, they're worried about kind of where inflation is at. But they've got to balance that with a very different growth trajectory than what the U.S. is seeing. And I think that's particularly apparent sort of in the productivity statistics, where Europe hasn't really seen that much growth in like the last decade or so.
And Charlotte, there were a couple of weeks in the summer where we thought the EU could actually outperform because of valuations, maybe some of the gains compared to U.S. stocks. And then that hasn't materialized.
That's always the classic one. You get the same thing with the UK. This is going to be the moment because the indices trade on a lower level. But actually, if you look at the underlying companies, the US market does incredibly well because of the dynamism of the US economy. They have the big leading tech companies in the world which have produced amazing profits. They have some of the big leading healthcare businesses, some of the big leading financial businesses. So, it's not a great surprise that the US market therefore does well and also trades at that premium because that's where you can get those great returns and that great growth.
Is there anything in healthcare, luxury or others in Europe that, because Europe is leader in that industry, that actually you're going to see far greater returns than elsewhere?
There are definitely pockets of great businesses in Europe. ASML, as we know, is the leader in EUV and the actually linchpin of sort of investments that are going on in semiconductors. So that's been a great business. Things like Novo Nordisk, along with Eli Lilly, leading on things like obesity. So there are pockets of these great businesses within Europe. But as a whole, yes, as you say, the economy is struggling and has been doing so for a long time.
What does that mean for some of the leading indicators, Justina, that you're looking at?
Yeah, and I think, one big one is kind of in Europe is the PMIs. Over the past few days, we've kind of had numbers that were maybe kind of still below 50, still in contraction territory, but a bit better kind of than people were expecting. And of course, kind of all eyes are on kind of the U.S. this week. Today, we're getting these kind of manufacturing indicators. Those have been in the slump for a while now, and people are expecting that to stay the same. But of course, jobs number, kind of that's going to be the focus this week.
Here in the UK, so away from the data and the craziness that is like Fed expectations, here in the UK we're seeing quite a lot of takeovers, or potential takeovers.
We are, yeah. So, we've had Hargreaves Lansdown earlier. Rightmove was the big story yesterday, moving up in sort of, interest coming through there. And I suppose that has been a share that's been under pressure, one, because of worries about the UK housing market, but also worries about competition coming in from CoStar. So, that was, but it's still a great asset. It still controls most of the sort of advertising for real estate in the UK. So you can see why somebody might be interested.
Justina, we were talking about China yesterday. Is there anything else that we should be watching out for in China because of the links, especially between Europe and China?
Yeah, I think, one big indicator of Chinese weakness here is the commodity picture. And so we're seeing kind of like stockpiles of iron and also kind of copper weakening. And I think if you kind of look at that part, you can see sort of the concerns around China there, and in particular, the manufacturing picture. So it's kind of interesting because if you think of risky assets, on one hand, you have stocks near global highs, but on the other, in terms of the more cyclical elements, I mean, iron, kind of copper, I mean, all of those are kind of showing an economy in the doldrums here.
Thank you both for joining us. Charlotte Ryland there from CCLA Investment Management and our cross-asset reporter, Justina Lee. Coming up, tensions remain high across Israel after a day of protests. We'll bring you the latest on the prospects for a ceasefire. That's next, and this is Bloomberg. Now let's turn our attention to the Middle East, where thousands of Israelis took to the streets in labor strikes and protests yesterday. It's the strongest push yet to force Benjamin Netanyahu's government to agree to a ceasefire with Hamas and secure the release of hostages in Gaza. Now, despite rising anger, the Israeli Prime Minister is standing firm on ceasefire terms.
We say yes, they say no all the time, but they also murdered these people. And now we need maximum pressure on Hamas. I don't believe that either President Biden or anyone serious about achieving peace and achieving the release would seriously ask Israel to make these concessions. We've already made them.
Well, let's bring in our MEA News Director, Rosalind Matheson. Ros, thank you so much for joining us. I mean, the pressure continues to mount, but is Netanyahu now over the worst of the protests, or will they lead to a ceasefire?
Well, it seems like the protests are going on today, but they are possibly smaller in size, a bit more muted. And as you can see, he made that somewhat unusual for Benjamin Netanyahu apology to the families of those 6 hostages who were found killed recently. So that was sort of a personal apology to them, mixed with that, again, that idea of defiance on his part, that he feels that Israel's conceded enough in this conversation around a ceasefire, that if they concede more, they're going to risk allowing Hamas the opportunity to regroup, to rearm and to come back at Israel. So, very much standing his ground on that front while sort of appealing personally to the hostage families. And it seems like the protests are still there, but not perhaps as big as they were the previous 2 days, and no further strikes that we've seen today. So the question is, does that public pressure continue, or does it start to dissipate? And really, you can just see that people in Israel are also probably fatigued by many, months of war with Gaza, the impact there also, as well as in Gaza, the impact on the Israeli economy, waiting for potential Iranian retaliation for the death of the Hamas leader that happened back in July at this point. So they've been sitting waiting for stuff for quite a while. So do they have the momentum to keep going? It does seem as though Benjamin Netanyahu may have stared this down. Yet again, he does have that quality about him that allows him to pass through moments of crisis, but it does reflect more broadly this very deep sense of unease and unhappiness and frustration in Israel that we were seeing even before the war broke out.
So, Ross, does something need to happen for a ceasefire to actually take place? Is it negotiations? Is it the U.S. elections? I mean, we know that the U.K., for example, suspended some of the arms sales to Israel. Does that make a difference?
Well, that makes a difference politically. It was quite a symbol on the political side. It doesn't really do anything militarily. It's a tiny amount, really, of weaponry that British companies ship to Israel. It's only a proportion of that will be suspended, mostly components. So it's not materially going to impact the Israeli military that we can see in a very significant way. What it is a political signal from the new Labour government that they've got concerns about, again, what's happening with the war inside Gaza, particularly around international law. And so they're expressing that. So that's a bit of a divide that's opening. We've seen the criticism that's come back at the UK for that decision. But, the fundamental sticking points of a ceasefire, they're just there. They never get addressed. They've been going on for months, and there's just a dig in on that, and there's no solution to that inside.
Ross, thanks so much. Ross Matheson there. The Pulse continues. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The dollar resumes its rally and the yen maintains its gains after Governor Ueda reiterates the BOJ will continue to raise rates if the forecasts materialize. Cathay Pacific cancels all of its scheduled flights from Hong Kong to Singapore today, and more services across Asia after discovering a faulty engine component on some of its Airbus A350s. Plus, Volkswagen is considering unprecedented factory closures in Germany as the country's most important industry fights for its future. So, Bloomberg understands that degraded fuel lines are suspected as the reason that Cathay Pacific cancelled multiple Airbus A350 flights for precautionary checks. Now, the carrier expects all affected aircraft will resume operations by Saturday. Siddharth Philip, our Bloomberg deputy team leader for global aviation, joins us now. So, Sid, you sat down, and I literally said, I have so many questions for you, because this could be terrifying, but then you look at the share price, and maybe it's not as scary as we think, because Airbus is up and actually Rolls-Royce is up. They found a component in some of these Cathay Pacific engines made by Rolls-Royce, and so they have to change them.
Absolutely. So at the moment, it's still sort of unclear what the major ramifications are. There's an investigation underway by the Hong Kong Civil Aviation Department, which is analyzing what really went wrong with this. Cathay Pacific has talked about how they have found 15 aircraft with the engine component that's had the same defect as the one that had the failure, had to return back from its flight to Zurich. And essentially, they're looking at replacing those parts on those engines. Mm-hmm. And so far, they've replaced 3 parts on 3 engines, and they expect all the repairs to be done by Saturday and have the fleet back in service. But at the same time, it still remains to be seen whether or not, from the investigation, they will sort of require a worldwide check across the A350 fleet. Right. And I think that's really the major question as to what the impact will be on global aviation, because that will sort of throw schedules out the window. It will affect, it'll potentially add cost and complexity, and sort of just be a downer for the A350 when it's had a lot of success in recent months.
Yeah, so Sid, how does it work? Are all A350 engines the same with the same components, or could it be something specific for the fleet that was sold to Cathay Pacific?
No, so all A350s have engines made by Rolls-Royce, and essentially there's the XWB-84, which is on the smaller A350-900, and the XWB-97, which is on the bigger 1000s. And we still need to see if it's an issue with just one specific variant or across both. And I think that's the sort of key question. While Rolls-Royce has said that the repairs are relatively straightforward, the engine doesn't need to come off the wing, and essentially it can be done while the engine's on wing. And that sort of is a positive sign for the company, because essentially that means it wouldn't take that long for a replacement of those parts and essentially getting that engine back in the air. Yep. And so that's a sort of upside to this whole issue. But at the same time, the investigation is still underway, and we'll have to wait to see what the investigation concludes.
So who's doing the investigation? Cathay Pacific is doing their checks. Airbus and Rolls-Royce, I imagine, together with other plane makers, are also checking this. So
this would be across the manufacturers, it would be across regulators, and obviously EASA is the main regulator for Airbus. But at the same time, there's also the Hong Kong Department of Aviation, and we've seen some reports that the Chinese aviation authorities are also looking into this. So at the moment, it's fairly widespread. We don't really have a clear sense of who's leading this investigation, but at the same time, it is underway, and we will see some sort of report on what the impact is across the fleet.
Thank you so much, Sid Philip, there with the very latest, of course, on Cathay Pacific. He's Bloomberg's deputy team leader for global aviation. Now, Aston Martin's new car, Vanquish, has been the center of attention at the Venetian Lagoon during the Venice International Film Festival. We spoke to the executive chairman, Lawrence Stroll, about how crucial the new launch will be for Aston Martin and his ambitious Formula One plans.
The demand's going to come from our long waiting list Aston Martin customers. We have a long history of making wonderful V12 engines. This is our newest and latest, greatest made in-house. But we have a long following of Aston Martin customers for our V12 engines, and have for many, many decades. We've already shown the car to several customers with great enthusiasm.
And the expected demand, I mean, is there any expectation from you and the team that you're going to be going above that 1,000 a year? Why keep the production so limited at this point?
It is our flagship vehicle. We have history and data from our previous flagship vehicle, so before the Vanquish, our last flagship, was called a DBS. We were selling approximately that amount of volumes, approximately 1,000 a year for several years. That's the right amount of demand and supply. You know, these cars are made to order. They're all built by hand. So we know from history that that's about what our demand will look like. And we don't want it to be more than that. You know, this is a very, very special car. And 1,000 a year is the right number, as history shows us.
You have a new CEO, of course, leading the business, Adrian Hallmark. Some analysts have questioned the near-term targets of the business. Does Adrian stick to those targets, Lawrence, or is this an opportunity to revise those targets for Aston Martin?
No, Adrian's done plenty of due diligence before he came in. I'll let him get his feet under the desk before I answer that. But basically the answer is he does believe in the targets. We are on a plan. He's bought into that plan, and we'll be helping to deliver that plan.
Lawrence, is Adrian Newey going to be joining the team?
I certainly hope so. Adrian and I have been talking not only for months, but actually for years. Adrian is clearly the most talented and gifted individual in Formula One based on his track record and history, in addition to being a hell of a gentleman. So I'd be very excited for Adrian to join our team, as I think every other Formula One team on the grid would feel exactly the same.
And we can assume then that you're pulling out all the stops, Lawrence, to ensure that Adrian does join Aston Martin Formula One.
You can definitely assume that.
What a backdrop. Aston Martin Executive Chairman there, Lawrence Stroll, speaking to Tom McKenzie in Venice. Always a good idea to be in Venice. Now to France, and President Emmanuel Macron has met with former Socialist Premier Bernard Cazeneuve and the Conservative politician Xavier Bertrand. Well, Macron is set to name a Prime Minister in an effort to end weeks of uncertainty about the next government. Alan Katz, our Paris Bureau Chief, joins us now. Alan, this is like waiting for the next Pope. Why is this taking so long?
That's a very good analogy, actually. It's taking a really long time for two reasons. Part of it is Macron's personality. He really could have tried to start naming people right after the elections, but he wanted to wait for a variety of reasons. One was claimed, you know, the Olympics would be problematic to do it during the Olympics, and the group that got the most votes only got sort of slightly more than anyone else, so it would be difficult to name someone from that party. But a lot of that is actually his personality and sort of the way that he often dithers with these kinds of nominations of individuals. The second is the results of the election. You know, he called a snap election in June. The result was that you have a parliament that's roughly divided in three, and so in order to name someone, that person has to be able to get the support of roughly 2 out of those 3 blocks to simplify things, and that's not very easy because these blocks are really all in opposition with each other in terms of what kind of policies they'd want to support or even what kind of people they'd want to support.
So is there a front runner? And if so, who is it?
Is another good question. So if I had to guess, and it really would be a guess because I don't think anyone truly knows, and possibly not even Emmanuel Macron himself, because he's tended to change his mind on these kinds of nominations in the past at the very last minute, it would probably still be Cazeneuve because he fills more of the requirements really than anyone else, particularly in terms of his ability to sort of reach across the aisle and get support from different parties that were not necessarily from his original political group, which he came out of the Socialist Party. But that's really just a guess. Yesterday there was a name of someone who came up, a guy named Thierry Baudet, who no one had ever heard of before. That was presented as, you know, as close to being a done deal. Now that his name is sort of gone by the wayside again. So again, if I had to guess, it would be Cazeneuve, but at this point, still no one really knows.
So interesting. Alan, thank you so much. Alan Katz, our Bloomberg Paris Bureau Chief. Coming up, we'll discuss growth in the beauty sector with the UK Managing Director of cosmetics giant Shiseido. That's next, and this is Bloomberg. back, everyone. Now, the conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, despite messages of fiscal doom and gloom from the UK government, there have been signs that Britain's economic pressures are fading. The rebound in UK retail sales reflects a steadier outlook, and the pressure on households is easing as wage growth surpasses inflation, leaving more change in people's pockets. Well, let's discuss all of this with the UK consumer with one of the world's oldest and largest cosmetics brands, Shiseido, the company behind labels like NARS and Drunk Elephant. Now, the firm has struggled with weaker Chinese demand and production issues in the US, but it does say the UK is the fourth largest beauty market in the world with lots of opportunity. Well, joining me now is Charles de Montalivet, the company's UK managing director. So, Charles, thank you so much, and welcome to The Pulse. I mean, this is an exciting, of course, opportunity for you to grow here in the UK. We talk a lot about consumers, being careful in how much they spend on where they spend. Can you talk us through whether you're seeing resilience in the UK consumer when it comes to beauty products?
Yes, absolutely. So thanks for having me. Really delighted to be with you this morning. Yes, you're right. Actually, we've seen softening in the demand, even though the beauty market in the UK remains very dynamic at around plus 10%. So it's a very resilient market, but it's been softening lately, especially as we see people arbitrating with also the rent increase, the mortgages, but there's always good demand for products with quality. And in that context, at Shiseido, I must say we've been on a very positive trend. We had our record year last year in terms of financial performance at plus 21%. So we're definitely surfing on a positive trend. What we'll see also is some people are trading down to more accessible brands. And we, again, thanks to the variety of our portfolio and our 12 brands in the UK, we've been able to cover the scope of needs of these customers. Yeah.
I mean, I was surprised actually that you told me that the UK is the fourth largest cosmetics market in the world. What makes the UK more attractive? And again, do people size up in times of recession? Is it the lipstick index? What do people enjoy buying?
Yeah, so I mean, you're right. Actually, UK is a massive market when we talk about beauty in general. It's more than £5 billion. The reason for that, I think there's always been an appetite for those products in this country. Also, I think there's a lot of innovation, new brands. I mean, we see a launch of tens of new brands every year. And also, I think UK is a very digital market, so has been really resilient, especially when the stores were shut. So that's probably explained the size of it. It's a key market for us, obviously, to crack. And as I say, people are after good products. The lipstick index, it's interesting. It seems like when times are tough, people try to actually secure their little piece of luxury, and beauty is one of them. So we see that sales of lipstick, I mean, it means also fragrances and your foundation remain quite strong even in tough times. Yeah,
in the newsroom, we're bronzed within an inch of our life. Give me a sense of the reopening of Sephora. Does that make a big difference to you in the UK market, or how much of your sales are online?
Yeah, first, as part of online, I mean, at Shiseido, more than half of our sales are online, so we are a champion in terms of digital. The average of the market's around 33%. Sephora came back, after 13 years out of the market, so it was a very well-expected comeback. I must say they've done a brilliant job, and they have very ambitious plan. I think it was a good thing for the market, for its competitors as well, and for the brands. It's been shaking everybody. It's been forcing other retailers to become more creative, to actually change their concept. And I'm sure you've seen that others have really muscled a little bit their offer and presentation. For us, it's a massive opportunity to reach especially younger customer, which Sephora is really targeting.
So when you look at your products, I was, surprised to read, for example, you have fragrances from Narciso Rodriguez to, for example, NARS, which we knew, Drunk Elephant. Do you feel like you have enough of a catering for all audiences, or are there any acquisitions on the table?
Yeah. So, for us, as I said, this market is absolutely key. We have a portfolio of 12 brands, but we actually want to expand. So our growth, we're number 8, so we're a challenger group today. Yeah. Our aim is to be entering the top 5 in the next 5 years. So through that, we will be doing through organic growth. Yeah. There'll be geographic expansion in the country. We're looking into Ireland. We're going to open a new NARS boutique in Glasgow, for example. But also, we want to make acquisition. I mean, we just acquired a brand called Dr. Dennis Gross, which is still in its market, and we want to accelerate. We just signed, I don't know if you've seen in the news, the fragrance license for Max Mara, so strengthening of fragrance portfolio. Fragrances is a big opportunity for us because we are underweighted on that massive category.
So, Charlotte, talk to me about how is everything changing a bit? Are we more into, for example, skincare, beauty care, which is why you bought Dennis Gross, compared to the makeup and the heavy foundation? Is that changing?
Yeah, we actually, the balance between the categories has not evolved that much. Half of the market are fragrances, and the other half is shared roughly between makeup and skincare. What has changed is where people shop. I mean, social media has been a key driver for actually discovering brands, buying brands. We call that social commerce. But also, we see that all this category remains very dynamic, around +10, all of them. So I wouldn't say that there is one that's winning at the moment. It's very much also social media is driving what consumer buy.
What do you have to get absolutely right? Is it advertising? So who you advertise to, through what medium, through what social media or influencer, or is it pricing?
I'd say it's a combination of all. First, you need to have the right product with what people are spend. Our choice at Shiseido is very much to go for the luxury and quality products. I mean, we will never compromise about our ingredients, the safety of our products. But you're right, actually, I think people will go for what's hot at the moment. We see some brands being hot on social that to really take the fair share. But this thing has always a limited time. So the Drunk Elephant, for example, has been growing 90% up last year, because of some influencers really advocating for it. So I think we need to be targeting the right media, the right audience, and ultimately have the best innovative product.
I mean, I think in general, the beauty industry has been growing some double digits over the last couple of years. Yeah. Do you expect that to slow down?
I mean, the few times where we said it will slow down, it never does really, actually. But yeah, we're planning next year to be probably around 7-8%, so it still remains dynamic. Again, people might trade down some more accessible brands. I think they'll still save money, to buy stuff for quality and prestige. So I don't expect this to slow down radically, especially with inflation reducing at the moment.
Is there more competition from Gen Z brands targeting younger customers?
There is actually. I mean, it's one of the facts of this market that there are many brands launching every year. Mm-hmm. On one sense, it's good. It's more offer for the customer. Also for us, it keeps us on our toes. It gives us opportunities for acquisition. But yes, it does make the market more competitive. It does actually force us to stand out, be more disruptive, take different avenues to launch, especially smaller brands where we have limited media. So I see it as a positive, and we're lucky that we have a market which is buoyant.
There's a trend in a lot of teenagers, especially teenage girls, actually going into some of these shops wanting skincare that could be disruptive, actually, to their skin, but also wanting cosmetics maybe a little bit too young. Do you feel responsible as a cosmetics brand to do something about it?
Yeah, actually, we do. I think it's important. So there's been a lot of ink on this, tweens and teenagers buying skincare in particular. I think it's a good thing because it has really opened a debate who should be educating those young people. I'm personally a father of 3 teenagers, so I know what they're after. I think the responsibility is shared between the brand, who have a duty of transparency, of educating about the ingredients, the benefits, and the usage. But I would say also the parents have definitely a responsibility to accompany their children in the same way they do for other things, and also to actually have the opportunity to say no or bring back a product in store. For sure, I think tweens need to take care of their skin, but face cleansers, SPF is more than enough. They for sure should not be using potent products with acid or retinol. I mean, that's not good for the skin, and the skin doesn't need it, actually.
Charlotte, thank you so much for joining us today. That was Charlotte de Montalivet, Shiseido UK Managing Director. We'll have plenty more on The Pulse, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, the launch of ChatGPT less than 2 years ago sparked an AI frenzy that fueled talk of a fourth industrial revolution. Silicon Valley names grabbed much of the attention, but some of the biggest names are actually happening in Taiwan. Our tech reporter, Annabelle Drulers, has more.
Taiwan is the home of our treasured partners. This is, in fact, where everything NVIDIA does begins.
It's become a linchpin of the global economy. Taiwan's dominance in advanced chips has grown through the AI boom, creating fortunes in the process. Local industry billionaires are 90% richer since the introduction of ChatGPT in November 2022, while stocks in Taipei have surged. Property prices hit a record high in March, with the biggest gains in the city of Hsinchu, the home of semiconductor giant TSMC. That wealth boom is raising fears some will be left behind.
There is a worsening of income distribution across the board, and I don't see any measure to improve this at the current juncture. Parents take the brunt by helping their kids, buying apartments and so on, but it's not sustainable because the next generation won't be able to do this.
Taiwan's government, though, has set ambitious growth goals, seeking a $1 trillion economy by 2028, with GDP per capita set to surpass that of South Korea next year. Annabelle Drulers, Bloomberg News.
Well, that's the latest on semiconductors. Let's also look at the markets. Global stocks actually hovering near all-time highs. Traders, again, preparing for a lot of data releases. Today, we have U.S. manufacturing data, and then on Friday, it's the big one, is U.S. jobs. So this is a picture also for the U.S. 10-year yield. And then when it comes to yen, there you go. We have it up. So yen currently at 145.85. Up next, Bloomberg Brief, and this is Bloomberg.